Elaine Kub is our corn and soybean market analyst this week. The country's farmers are maintaining a planting pace ahead of normal. Growers have planted 3/4 of this year's corn and 36% of this season's soybeans. Machines are rolling in the north, where 3 states are well ahead of their 5-year average corn planting paces by 29 points in Minnesota and Wisconsin and 33 points in North Dakota. Those rates do not carry to Nebraska, as we'll discuss in a few minutes. We talked with Elaine Wednesday afternoon about crude oil's market rally, strength in corn prices, and planting progress in her area of South Dakota.
Well, it's slow. I think the concerns here pale in comparison to the concerns in the eastern corn belt. When you look at, the Monday crop progress numbers, that's really where they're way behind on corn and way behind in soybeans, and it's all because of the wet weather, which even folks in the western corn belt are familiar with, obviously, and struggling with to some degree this season. However, I want to say it's the middle of May, and you already hear people worrying about switching to soybean acres, and I think it's way too early to worry about that. I mean, we're taping this on May 18th. May 15th is usually when the academic studies start to say that you might get a yield loss, but you never really know what the summer weather will be. We don't know that the late planted corn won't actually benefit from it. So at this point, I'm not too worried about a change in acreage yet.
So soybeans got the headlines last week after the supply and demand estimates, but corn has put together a nice little baby rally here. Diagnose for me what's going on.
Yeah, absolutely. In fact, if you look sort of in this post-planting intentions time frame, so since April 1st, it's gone up more than 50 cents, the nearby contract has. So this is nothing to sneeze at. This is some really good opportunities for folks. I think it is mostly following the soybean story, and to some extent following the story from South America, or just the demand story that the U.S., from an exports perspective, definitely does benefit when there is tightness or unavailability or even political instability in Brazil or elsewhere.
Right, and you kind of got all of the above going in Brazil right now, but what about the currency down in Brazil? How is that impacting what could be happening in the U.S.?
That is, I think, probably the #1 leader of this soybean rally, and like I said, I think that the soybean rally is what's also leading the corn rally. So in the U.S., the dollar and our soybean prices move in opposite directions, but in Brazil, the Brazilian real tends to move in the same time or in the same direction as the international soybean prices. So as that currency goes up, international Chicago soybean prices also go up. So it's wonderful news right now that there has been sort of this optimism that a change in political leadership there could help their economy and help their currency. Now, this week we have seen the real sort of stabilize or stall and kind of back off to about 28 cents, 28 US cents on the dollar. And because, it's not magic, right? So Dilma Rousseff has been suspended, but obviously we don't have suddenly magic, wonderful economic things happening there immediately. So there's a little bit of a reckoning with reality.
And even if that impeachment were to happen, Elaine, correct me if I'm wrong, there's still some uncertainty about overall how that would impact the real and corn and soybean markets, exports, etc.
Yeah, absolutely. There's no reason to believe that this is going to fundamentally change the global balance of how much grain there is or where it will be going. So it's nowhere near the sort of change that happened in Argentina politically, where you really are changing some tariffs and changing some actual, like I mentioned, the balances of what goes where. Here, it's really just a play of the currency and of the overall stability there.
All right, let's go back to the U.S. here. Tell me what's happening right now in the U.S. wheat market.
Not a whole lot. This week they have followed soybeans and corn up a little bit, but really wheat is going to have a hard time making a bullish argument right now because of this long-standing story of very ample global supplies of wheat.
The U.S. crude oil market has a nice little rally going this week, at least as we talk on Wednesday. What's behind it?
A lot of things, a lot of global things, supply disruptions in Africa, in Canada, even from these wildfires. So there's the idea that this rally could continue toward that $50 level. And what is exciting about it is how that may or may not affect the ethanol market. We're seeing some more excitement coming into the RIN trading. Those are 80, 90 cents going into the summer. So going into the summer driving season, there is the possibility that the corn market, or at least the ethanol market, can take advantage of a continued rally in crude oil prices.
In corn and soybeans, what are you seeing in basis right now?
You know, it seems weak to me. The national average corn basis is 35 cents under, I think, and it's really hard to say what it should be in May. You know, there's no hard and fast rule of what a seasonal tendency should be, but that does seem a little weaker than you would expect this time of year. And soybeans also 60 under kind of processor bids, that seems quite weak too, and I suspect that that's a reflection of farmer movement. You know, we saw these incredible rallies, or really pleasant rallies in my opinion from a farmer perspective, and I think the farmers are rewarding the markets by actually moving that grain now.
Let's talk more about that. Is this still an opportunity that you should be moving new crop soybeans?
Yes. So, I mean, I want to hedge that a little bit, that a couple of months ago, you know, I did these statistical studies of what time of year would you most likely see the high in sort of a normal supply year. And the date I calculated was June 18th, I think, for corn. So watching the market churn higher here has been rather validating, and it gives me to think that it might continue, you know, into this sort of seasonal time frame. But that being said, these are, you know, we really need to be thinking about getting seasonal sales done in a fairly normal manner. And April, May, June, this is the right time frame to be making little incremental sales, not trying to wait for exactly the high, but to make sure that you're rewarding the market as it is churning higher.
And is that in both soybeans and corn, Elaine?
Yeah, absolutely. Probably more urgent for the soybeans than the corn when you look at the price ratio. The price ratio of new crop soybeans to corn is 2.6 to 1 right now. So that suggests that soybeans are a little overpriced, you know, for all of the reasons that they've been leading the market. But that would, you know, if that's going to snap back down to its historical average, it would be more urgent to sell the soybeans than the corn in the near term.